Your trading strategy is probably fine. You're the problem. I know that's hard to hear. I know you might have just flinched or rolled your eyes or thought about clicking away. And I want you to stay with that reaction for a second, because that reaction, that small flash of resistance you just felt, that's exactly what we're going to be talking about for the next several minutes. Because that flinch, that's not just a feeling, that's data. That's your psychology showing itself in real time. And if you can learn to read that in yourself the same way you try to read a chart, everything about your trading changes. But I need to say something else before we go any further, because I don't want those words to land the wrong way. When I say you are the problem, I don't mean it as a verdict. I'm not standing here looking down at you from some place of perfect discipline and effortless execution. I've sat in the chair you're sitting in. I've felt the confusion, the frustration, the quiet shame of knowing what to do and doing something entirely different anyway. So this isn't a lecture. I'm not here to tell you what you're doing wrong so I can feel smart. I'm here because I genuinely believe that what I'm about to share with you is the only thing that actually changes results over the long run. Not a new system, not a better indicator, not a stricter set of rules, something much harder to find, and infinitely more valuable, a different way of seeing yourself in relationship to the market. So let me say it again. And this time, I want you to hear the second part just as loudly as the first part. You are the problem. And that is the most liberating thing I could possibly tell you. Here's why. If the market is the problem, you are powerless. You can't change the market. You can't reason with it. You can't shame it into giving you back what it took. If your broker is the problem, you're at the mercy of a relationship you can barely control. If your strategy is the problem, if the system is broken, if the indicators are wrong, if the edge doesn't actually exist, then you are a person standing in a desert looking for water in a place where there is none. And that's a hopeless place to be. But if you are the problem, if the issue lives inside you, inside your beliefs, your psychology, your relationship to uncertainty and risk and money and self-worth, then you can do something about it. You have agency. And in trading, agency is everything. The market will always be out of your control. You are not. So what I want to do today is walk you through something I've spent most of my life thinking about. Not just thinking about living, because the ideas I'm going to share with you didn't come from books I read or seminars I attended. They came from watching traders fail in the same ways, over and over, regardless of what markets they were trading, regardless of how smart or educated or motivated they were. And they came from looking at the small number of traders who made it, who built real, sustainable careers from this, and trying to understand, honestly, what was different about them. Because here's the thing I found. It wasn't their strategy. In most cases, it wasn't even their discipline. At least, not in the way most people talk about discipline. It was something quieter, something harder to point at. It was the way they related to the uncertainty that is permanently, inescapably baked into every single trade. Let me tell you about something I call the thermostat. Not a real thermostat on your wall, a psychological one. A setting inside you, running beneath your conscious awareness, that determines what level of financial success feels normal, what level feels comfortable, what level feels like home. And here's the thing about thermostats. They don't just heat things up. They also cool things down. They regulate. They bring things back to baseline. And if your internal thermostat is set to a certain level of income, a certain level of account size, a certain relationship with money, it will find a way to bring you back there, even when your conscious mind is desperately trying to go somewhere else. I want you to think about that for a second. Think about your own trading history, if you've been at this for any length of time. Has your account ever found its way back to roughly the same number, no matter how high it climbed? Have you had a great month, a genuinely great month, the kind where you thought, this is it? This is when things change, and then watch that progress quietly, mysteriously dissolve? Not in one dramatic blow-up, but in a series of small, almost reasonable-sounding decisions that somehow added up to giving it all back? If that sounds familiar, I'm not telling you that you're weak or undisciplined. I'm telling you that your thermostat was doing its job. It was keeping you where you believe you belong. And where does that setting come from? That's the uncomfortable question. It doesn't come from your trading education. It doesn't come from your strategy. It comes from something much older than any of that. It comes from a lifetime of experiences, messages, and beliefs about money, about risk, about whether you are the kind of person who gets to have consistent success. Some of those messages were explicit, things people said to you directly. Others were absorbed without words, watching how the adults in your life related to money, to ambition, to failure. Some of them came from your own early experiences of trying and losing and concluding something about yourself from that. And here's the brutal irony. None of those experiences had anything to do with trading, but all of them are in your trades right now. They've been there since your very first position. They're influencing every decision you make, beneath the level of conscious thought, like software running in the background of a computer you're trying to use for something completely different. So the question isn't just, how do I become a better trader? The question is, what do I believe at the gut level about whether I deserve to be one? Now, I know some of you are already resisting this. I can almost feel it. You're thinking, I came here for trading advice, not therapy. And I understand that completely. Because for most of my early career, I thought the same thing. I thought the solution to trading problems was more market knowledge, better analysis, tighter rules. And some of that matters. I'm not saying analysis is irrelevant. But let me ask you something. How many times have you known the right thing to do and done the opposite? How many times has your system given you a clear signal and you hesitated or ignored it or twisted the interpretation until it told you what you wanted to hear? How many times have you moved a stop loss, the one you swore you would never move, because in the moment there was a very convincing story about why this time was different? If that has happened to you, and I have never met a trader who can honestly say it hasn't, then you already know that knowledge is not the missing ingredient. Something else is running the show. And that something else is what we're here to talk about. I want to take you somewhere now, not backward, but forward. I want you to imagine two traders starting on the same day. Same platform, same account size, same basic strategy, same market conditions. Let's call them Trader 1 and Trader 2. Trader 1 goes in with excitement. He's done his homework, watched the videos, built his system, and the first few months are incredible. He makes money, sometimes a lot of it. He starts to feel like he's found something, like he's cracked a code that most people can't see. And then the market shifts. Or maybe it doesn't even shift. Maybe he just hits a normal losing streak, the kind that happens in every system with an edge. But it doesn't feel normal. It feels like a betrayal. He starts tweaking the system, adds another indicator, moves to a different time frame, finds a new mentor, and the cycle continues. Flashes of success followed by erosion, followed by searching, followed by more flashes, followed by more erosion. By year 3, he's exhausted. He knows more about markets than he ever thought he would, and he's roughly where he started financially. He tells himself he's almost there. He tells himself the next refinement will be the one that makes it click. But something underneath knows differently. Something underneath is starting to equate trading with pain. Now, Trader 2, same starting point, same early results. But early on, maybe after her first major losing streak, she stops and asks a different question. Not what did the market do, but what did I do? Not why did the system fail, but why did I deviate from the system? She starts keeping a journal, not of her trades, exactly of her mental state before and during and after each trade. She starts noticing patterns. She notices that she's always more reckless on Monday mornings, because the weekend gave her just enough distance from the last loss that she's reset to overconfidence. She notices she holds losing trades longer when she's had a fight with someone, or when she's tired, or when she feels behind on some invisible schedule in her head. She doesn't fix all of this overnight. It takes her years, honestly. But by year 3, something quiet has happened. She's built a relationship with her own psychology. She trusts herself in a way Trader 1 doesn't. Not because she wins more often, but because she knows why she does what she does, and she's learned slowly, imperfectly, how to act from intention instead of reaction. Which trader are you right now? And more importantly, which one do you want to be? Here's the thing about certainty, and this is something I feel very deeply, something I want you to really sit with. We've all been taught, since we were children, to want certainty. School gave us right answers. Jobs gave us performance reviews with clear criteria. Even relationships, even the messy, unpredictable ones, come with cultural scripts about how they're supposed to go. Certainty has been the currency of almost every system we've ever participated in. And then we walk into the market, and the market doesn't speak that language at all. The market doesn't know you. This is one of the most important things I'll say today, so I want to say it clearly. The market doesn't know your name. It doesn't know how hard you've worked. It doesn't know that you really need this trade to go right, or that you're trying to make up for a bad month, or that you've finally figured out what you were doing wrong before. The market is a collective entity, millions of participants, each with their own motivations, their own information, their own fears. And the result of all that simultaneous, chaotic human activity is something closer to weather than to logic. You can study weather patterns, you can make probabilistic forecasts, but you cannot make it not rain by wanting sunshine badly enough. And yet, and this is the painful part, most traders operate as if the market owes them something, as if the quality of their analysis creates an obligation, as if the depth of their need creates a counterpart. And when the market doesn't deliver, the interpretation isn't this is a random outcome within a probabilistic system. The interpretation is personal. It's a verdict. It's the market saying, you were wrong. You were stupid. You don't belong here. And that interpretation, that deeply personal relationship with an utterly impersonal mechanism, is the source of almost every psychological trading problem I have ever encountered. So let's talk about what actually separates the traders who make it from the ones who don't. Because this is where it gets interesting and a little strange and maybe a little counterintuitive. The traders who make it don't have more certainty. They have more comfort with uncertainty. That's the distinction. And it sounds simple, maybe even obvious, but I want to unpack it because living it is nothing like understanding it intellectually. Think about a casino, not the gamblers inside it, the casino itself. The casino has a game called roulette, and on every single spin of that wheel, the casino has no idea where the ball is going to land. None. They cannot predict it, they cannot control it. And yet the casino is almost never worried, because the casino isn't thinking about this spin. The casino is thinking about 10,000 spins. And across 10,000 spins, the edge built into the game, the slight mathematical advantage encoded into every table, will reliably produce a predictable outcome. The casino doesn't need to know what happens next. It only needs to know that the edge is real and that it will express itself across a large enough sample of events. Now compare that to a gambler. The gambler is thinking about this spin, this moment, this outcome. The gambler has a feeling about this one, a hunch, a system, a streak they're riding or trying to break. The gambler is emotionally invested in the specific outcome of a specific event that is, by its nature, random. And that investment, that need, is what the house is counting on, because it makes the gambler irrational. It makes them bet too much when they're winning and chase losses when they're not. It makes them attach meaning to randomness. And meaning, when applied to randomness, always costs you money. Most traders operate like gamblers, even if they would never call themselves that. Even the disciplined ones, the ones with systems and backtests and carefully constructed risk management plans, will often, in the heat of a live trade, switch from casino thinking to gambler thinking without even knowing it happened. They'll have a gut feeling this one is different. They'll give it a little more room because the setup was so clean. They'll move their target because it looks like it might go further. And none of those decisions are wrong because the analysis behind them is bad. They're wrong because they've stepped out of probability thinking and into outcome thinking. They've made this trade matter too much. Here's the principle I want you to take from this. A losing trade is not a failure of your system. A losing trade is the cost of doing business. It is as neutral and predictable and necessary as a store owner paying rent. You cannot run a store without paying rent. You cannot trade a system with an edge without accepting losses. The question is never whether you will lose. The question is whether you can lose in a way that doesn't compromise your next decision. And the answer to that question lives entirely in your psychology. Now, I want to go one layer deeper because I think this is the thing that most trading content never gets to. And it's this: you are not experiencing the market. You are experiencing your beliefs about the market. Think about that for a moment. Two traders can look at the exact same chart, the same candle, the same pattern, and see completely different things. One sees a bullish reversal. One sees a dead cat bounce. Both are using the same data. Both might even be using the same indicators. The difference isn't in what they're looking at, it's in the interpretive lens they're bringing to what they're looking at. And that lens is built entirely from their past experiences, their current emotional state, and the beliefs they hold consciously and unconsciously about how markets work and what they personally tend to see correctly. This matters enormously because it means the market is never really giving you pure, objective information. It's giving you a Rorschach test. It's showing you an ambiguous image and asking you to make sense of it. And what you see in that image tells you as much about yourself as it does about price action. The trader who is afraid of being wrong will look for confirming evidence that the position they're already in is correct. The trader who is afraid of missing out will find reasons why this is the one they can't afford to sit out. The trader who is recovering from a loss will look for setups that feel like redemption. None of these are market signals. They're psychological signals. And until you learn to tell the difference, the market will always feel chaotic because what's actually chaotic is the internal environment you're trying to look through. So, what do you do with this? How does this actually translate into sitting down at your screen tomorrow morning and making different decisions? Let me give you something practical, something simple. Not a new system, not a complex framework, just 3 questions. Questions you ask yourself before you enter any trade. And I want to be clear, these are not questions about the trade itself. They're questions about you, about the state you're in when you're considering the trade. The first question is this: am I trading from a place of calm curiosity or from a need to recover something? This one requires honesty, real honesty, because the need to recover something isn't always obvious. Sometimes it's trying to recover money from a recent loss. Sometimes it's trying to recover a feeling, your confidence, your sense of competence, your identity as someone who can do this. Sometimes you're not trying to recover anything financial at all. You're trying to prove something to yourself or to someone else or to some invisible audience in your head. None of those motivations produce good trades. Calm curiosity produces good trades. The state where you're genuinely interested in what the market is doing, where you have no emotional stake in a particular outcome, where you're willing to be wrong, that's the state from which clean decisions get made. If you're not in that state, the most powerful thing you can do is wait. The second question: if this trade loses, will I be okay? I don't mean financially, necessarily. I mean emotionally. Mentally, will you be able to close the loss, record it in your journal, and move to the next trade without the loss infecting everything that follows? If the answer is no, if losing this trade would leave you desperate or furious or in the kind of dark place that produces revenge trading, then you may be risking more than you can emotionally afford, regardless of what your risk management rules say. Because the number on the screen isn't the only thing you're risking. You're risking your mental state. And your mental state is your most valuable trading asset. The third question: am I following my rules or am I making a case for an exception? This is the sneaky one, because the exception always comes with a very convincing argument. It always sounds reasonable. The pattern isn't quite right, but the other 3 factors are so strong. The stop is technically in the wrong place, but the setup is so clean that you're willing to give it more room. I've heard these arguments. I've made these arguments. And the thing I've learned is that the quality of the argument is irrelevant. The moment you start arguing with your own rules in real time, you've already lost something important. You've switched from executing a system to improvising. And improvisation in trading is almost always driven by emotion, even when it's dressed up as analysis. Now, I want to talk about what happens after a trade because I think the post-trade ritual is just as important as the pre-trade preparation, and it gets almost no attention. Most traders evaluate their trades on outcome. Win equals good. Loss equals bad. And this seems logical. What else would you evaluate a trade on? But here's the problem with outcome-based evaluation. It trains you to measure the wrong thing, because you can make a perfect decision and have it result in a loss. That's not a failure, that's probability. And you can make a terrible decision and have it result in a win. That's not success, that's luck. And if you're evaluating on outcome, the perfect loss teaches you the wrong lesson, and the lucky win reinforces the wrong behavior. Over time, outcome-based evaluation corrupts your decision-making process, even as your account fluctuates around a mean. Process-based evaluation asks a different question. Did I follow my rules? Did I enter where I said I would enter? Did I manage the trade according to my plan, without improvising based on emotion? Did I exit where I said I would exit, even when it hurt? If the answer is yes, if you followed your process, then it was a good trade, regardless of the outcome. If the answer is no, if you deviated, if you made an exception, if you let a feeling override a rule, then it was a problematic trade, even if you made money on it. Because that deviation will come back. The market will find a moment when that same emotional impulse costs you significantly more than it made you this time. So here's what I want you to do. After every trade, win or lose, write one sentence. Just one. Not an analysis. Not a detailed breakdown of the market structure. One sentence, honestly answering the question, did I follow my process today? And if not, what was the feeling that made me deviate? That sentence, compounded across dozens of trades, will reveal patterns you cannot see in the moment. You will start to understand yourself as a trading entity, as a specific, idiosyncratic human being with specific triggers and specific vulnerabilities and specific strengths. And that self-knowledge is more valuable than any strategy I've ever encountered. And then the last thing I want to offer you, what I think of as the fastest, most reliable way to actually feel what it means to think in probabilities rather than just understand it intellectually. Here it is. Shrink the sample, not just the position. If you're struggling with consistency, you've probably already heard the advice to reduce your position size. And that's not wrong, but it's incomplete. Because if you're still thinking about each trade individually, if you're still measuring your success or failure on whether this specific trade wins or loses, then a smaller position size just means you're losing less money while reinforcing the same psychological pattern. What I want you to do instead is this. Commit consciously and deliberately to a 20-trade experiment. Not 20 trades where you're trying to make money. 20 trades where you are gathering data. You are a scientist running a controlled experiment. You enter every trade according to your rules. You manage every trade according to your rules. You exit every trade according to your rules. And after each one, you record the outcome not to feel good or bad about it, but simply to let the data accumulate. By trade 15 or 16, something interesting will start to happen. You'll start to feel the edge in a way you've never felt it before, because you'll be able to see it emerging from the actual results. Some will be losses, some will be wins, but the pattern, the slight, consistent tilt of probability in your favor will start to become real in a way that no backtest ever made it feel. And more importantly, individual outcomes will start to matter less, because you won't be thinking about this trade. You'll be thinking about the experiment. You'll be thinking like the casino. I want to come back to something I said at the very beginning, because I think it deserves to land differently now than it did then. Your trading strategy is probably fine. You're the problem. And I want you to hear that now, not as a criticism, but as a map. If you are the problem, you are also the solution. Not the market, not your broker, not the algorithm, or the market makers, or the news cycle, or any of the external forces that are so easy to blame when things go wrong. You, the thing you have the most access to, the most ability to observe and understand and gradually change, that's what's running your trading results. And that is genuinely the best possible news I could give you. Because here's what I've seen. I've watched traders who had brilliant analytical minds and comprehensive systems blow account after account because they couldn't get out of their own way. And I've watched traders who had modest, unremarkable strategies build steady, sustainable, genuinely life-changing careers because they understood themselves, because they developed an honest, compassionate, unflinching relationship with their own psychology, because they stopped trying to win and started trying to understand, and the winning followed. Not immediately, not linearly, but inevitably, the way all genuine understanding eventually expresses itself in results. You've been through a lot in this video. You've heard some things that maybe felt uncomfortable. You've been asked to look at yourself in ways that the market never asks you to do. The market just takes your money and moves on. But you've also been given something today that I think is worth more than any trade setup I could ever share with you. You've been given a framework for understanding why you do what you do. And when you understand why, you gain the one thing that changes everything: choice. You came into this video thinking about the market. I hope you're leaving it thinking about yourself. Because that shift, that reorientation from external to internal, from strategy to psychology, from outcomes to process, that shift is the work. That is the work that separates the traders who survive from the ones who don't. And it's available to you right now, not after your next system, not after your next course. Now, so here's what I want to leave you with. And I want to say it slowly, because I mean every word of it. You are not undisciplined. You are not unlucky. You are not broken. And you were not built wrong for this. You've just been trying to control something that was never meant to be controlled. You've been fighting uncertainty as if it were an enemy to be defeated, when it is simply the medium you work in, like water to a swimmer, like wind to a sailor. The market will always be uncertain. Every trade you ever take will have an unknown outcome. That will never change. But what can change, what has always been yours to change, is the way you relate to that uncertainty. Whether you need it to resolve a certain way to feel okay, or whether you can hold it lightly, execute your edge, accept the outcome, and move forward with your clarity intact. That is the skill. That is the whole game, really. And the starting point is always the same. It starts with you. If something in this video landed for you, if one idea, one sentence, one moment made something click that hasn't clicked before, I'd genuinely love to know which one. Leave it in the comments. Not for the algorithm's sake, for the sake of the community of people watching this who are right where you might have been at the start of this video. Your comment might be exactly the thing someone else needs to hear today. That's how this works. That's how real understanding spreads. And if this kind of thinking resonates with you, if going beneath the chart, beneath the candle, beneath the system, and into the mind behind all of it feels like the direction you want to keep moving in, then subscribing makes sense. Because this is all we do here. This is the only thing I've ever been truly interested in. Not the markets themselves, but the people who trade them, and what it takes to do it well, and what it costs when we don't understand ourselves, and what becomes possible when we do. Take care of yourself, trade well, and remember the edge you're looking for has always been closer than you thought.